What's going on, family? It's your boy, Mr. Bilbo Baggins. Today we're gonna go over some Group 101 stuff, just talking about little things I look for in the market in order to manage our trades better and what you should be looking out yourself. All right, let's get after it.
The trade when it's just about to go right.
So you're talking about stocks or
Nah, not stocks. Forex.
forex? Okay. Well, for one, if you're using the TP thing, then it would just be the second TP. But like the in terms of like smart money, right? You go break even. Let's say let me go to a different screen. Okay. So like for me, there's two different scenarios I'll go break even as far as like my strategy goes. The first one, like I said, is if different pair. The first one is if like basically we come back to my entry and then like push off like decently enough. I'll give you an example. And the second one, it will just be like when I hit my second TP. Now the third one, like I said, in terms of smart money, you want to wait for like a break of structure. So let's say like price is selling like this, right? Okay, boom, we come into some kind of demand. Okay. So obviously you're waiting for that touch. Let's say the touch happened here. And you got in here. The proper way to go break even in terms of like structure would be like either when it breaks this high right here, if you had entered here, or if it came back like that, it's right there, because that would now be a break of structure since this would technically be your charts right here. So on the break of structure, or I guess, I don't know, I guess yeah, the first break of structure you would go break even. And by the time you're up here, you should definitely be break even if you haven't broken down here. Because sometimes, depending on the time frame you're trading from, it can be premature to go break even. Like, so like if this is like the 15-minute zone, right, for instance, like it might want to actually come back here another time to mitigate something here because it has to build more liquidity up for the next move. So that's why I personally don't like to go break even like this. Because for me, I honestly don't like to track breaker structures and stuff like that. Like, I don't really trade like that. Like I just wait for price to give me signs that it's reversing, and then from there, I'm pretty much doing whatever I gotta do.
Yeah,
Oh,
because usually when I go break even on the first break, that's when I usually like miss out on the trade.
yeah, exactly. And you're taking your entry off like the 1 minute, right? Or like
2 minute.
2 minute, yeah, okay. I would say 1 to 3 minutes. So yeah, in that instance, all I was doing is like grabbing more liquidity for the next push up. So what I like to do, because I got kind of sick of that happening to me as well, is like, let's say I got in here, right? I don't really care what's going on as far as structure goes. I'm breaking even depending on like this right here. So like, as you can see, like this incidentally lined up with the second TP. But now that it hits the second TP, like literally, I'm going break even. I don't care what it looks like. Sometimes I get knocked out. Most of the time when I get knocked out, when I do it from like my strategy, usually for a good reason. Because by the time it gets up here, adjacent to like my entry, but it's pushed off more than enough for it to be able to, for me to be able to go break even, or at least like profits wise. And another instance, I'll go break even. So like, let's say it hadn't tapped this yet, right? Let's say price did something like this. Alright, so let's say I enter like above here, because I like to, take market orders or buy stocks. And when it taps my entry again, I'm gonna go ahead and go break even. Reason being is because in my eyes, if it's already hit my entry, like what it should be doing is going to take this out, right? Because that's the what order flow, where it's headed. Now if it doesn't take that out, then my assumption will be that it's just gonna do this. Because now this would be a failed demand, because the job of any low, as I touched before, is to go and take out whatever high that it came from. So if we come from this high right here and make this low, then I'm expecting this low to now do this. If that doesn't happen, I'm gonna go break even like instantly. Because I know that, like I said, chances of me getting knocked out are a lot higher. Now, at times it'll come and do this, knock you out, and like push up again. To me, that's not an issue at all, because I'd rather go break even and give myself the chance to get into another trade without, damaging my psychology, and let it get into drawdown, right? And maybe it pulls back up, but like by the time it hits down here and you're in this position, right, like you're gonna be fucking sweating. So I'd rather go break even and give myself another chance. Now if it comes in here, right, and it starts protecting this low and accumulating here, like, okay, cool, I can buy here again, literally at the same exact entry, or I could even do like something like this and enter lower. So it's a win-win for me. I didn't lose anything, and I get another chance. Now if I get knocked out on that one, I probably just will stop trading for the day or whatever, so I don't overtrade. But point being is, I'm all about risk management nowadays. Like I used to be all about profits, but what you understand, or what you learn from the game, is the people who are saying that the longest are the ones who can manage their risk. Like the profits are gonna come. I'm sure even bad traders have been in profit several times, but the biggest thing that kills most traders, especially in the beginning, is their inability to take profits and their inability to manage the trade when they're already in it. So another instance, I'll go break even that I forgot to mention. It's like, yeah, it has to do with what's it called, targeted highs and whatnot, but more so just the fact of like supply. Like, so if I tapped here and I knew that probably, like, if we were already selling pretty strong and I bought from here and we tapped here and I've already taken profits like at this area right here, then I won't take any more profits, but I will go break even, understanding that since we are technically like reversing, price could still like choose to respect that supply and come down and take this out. So again, I'm gonna go break even, and whether or not it comes back and knocks me out break even and I get back in, it doesn't really matter to me. Like I used to be super concerned with that back in the day, because I'm like, well, what if I miss out on profits? But 9 times out of 10, when I didn't like go break even or at least attempt to manage a trade, was when I end up losing more money or overtraded, because like now I've taken a small loss and I'm trying to get it back. But when I go break even, like to me, it's still a win in my book. Like obviously you don't want to just break even, because I mean, like obviously how are you gonna make money, if you're just breaking even? But like I said, being able to stay in the game longer than not is the name of the game. Like today, honestly, I overtraded. I took like 4 trades. I've already told you I took like 4 trades. The first 2 were good trades. Like the first one, basically, price was selling off pretty heavy. It looked like a good opportunity to buy, so I started to buy there. I took my profits, and then because of it, we pushed into a supply and started like basically not breaking it. I went ahead and went break even, and then it knocked me out. And at first I'm like, damn, like maybe I can still buy from here. But then it ended up just continuing to like flush. So then I was happy that I went break even. So then similar thing happens, price comes down. I'm like, all right, did some stuff like this. Like, bet, let me enter on this again. So I enter on, and on this time, what I did was, because I was already like in profit for the day, I told like I like was going off my TPs for one, but two, I went break even like as soon as I could, basically. Like when I tapped this first one, I went break even just because I knew like I'm already going against the trend for sure because of how heavily we're selling that day, and they hadn't really given too strong of an indication that it wanted to pull back on the higher time frame. So I knew I was kind of going against the trend regardless. So like with that in mind, like I'm gonna play just as aggressively, like in terms of my entry and my exit. So what happened on this one, I basically said it went up to like profit like maybe like 1% or 0.5%, and I told myself if it came down, and I'll do this a lot in trades, like, and you can try this out yourself. It'll really touch your discipline for one, but it helps me just to not like lead myself astray. So I'll tell myself like, okay, right now I'm like, let's say $50 in profit. If it goes down to $20 in profit, I will close the trade like instantly. Like let's just say like for the whatever particular trade I was on. So I'll say I'm $50 up. If I come down to $20, I'm gonna close it because I'm not willing to lose money on this trade. So what I did was I said, okay, if it goes down to 0.25% in profit, I would close the trade out instantly. So I closed it out, and lo and behold, like as soon as I close it, literally it flushes again. But then like there was the third trade, I told myself like, all right, I'm done trading because clearly like the market's not respecting my edge, blah blah blah. And you know what I did? I literally got back in on some like okay, so basically because I got knocked out early on that second trade, right? It was like something like this. Got knocked out like at half break even, I think. And then basically it started pushing up again. Like it gave like some big jerk in price action and it pushed up, and I bought like literally into supply, and that whole like instantly reversed on me. It was like one of those wicks where like it hits the thing and like the candle was a full body a second ago, and you look back and it's like literally a hammer. I was like, oh no. And I had to like basically at that point, oh no, that's when I hit my half break even, because basically if I don't get the opportunity to go break even, then I'll at least go half break even so I protect some of my position, because I'm already understanding due to like how price moves, if it wants to go, it's gonna go, you know what I mean? Like I'm sure you've seen it a bunch of times, like when price is ready to move, it's gonna start moving. So when I see it playing around, and especially before it hits this TP right here, I'm gonna go ahead and not go break even always, but I'll go half break even if I really want to trust the position, because sometimes going break even too early can't hurt you. Like there's a thin line between being too scared to be in a position and having good risk management, which is like, that's for you to find out through practice, but it's a very thin line. Okay, so then finally, like I think it was like maybe 30-40 minutes later, maybe an hour later, I saw like a better setup developing on the 15-minute. And finally, like I really shouldn't have gotten in this trade, honestly, because at this point that was my fourth trade, but it looked really good, it made sense, and so I got in it. And the reason I got in it too is because I knew that I made a mistake getting in on that third trade, so I was willing to risk it on a position that I felt more comfortable with. So like I said, that's the benefit of managing your trades like properly and going break even, because then like you can make that decision. Like if I got knocked out break even twice, I can technically go in that third time and try to make some profits, and if I lose, then obviously I'll be done. If I make money, then it's good because I already went break even, versus like taking unnecessary losses. From a risk management standpoint, it prevents you from being able to do that. Check these messages. You're welcome. Sorry, I'm reading these messages.
Bro.
Yeah, I'm reading right now. You're welcome. Also, I think it's when the lower high is shaking out, the trend starts to break in the opposite direction. No, yeah, you're right, JG. So, a chotch, like I was saying, Maya, would just be like, so like right here, let's say we were selling, this would be the high, low. Once this high gets made, and this low gets made, and you break above, like right here, like that would be your chotch. Because at that point, like, the selling for sure discontinued, and the buying started. Because, like I said, the job of any high is to break any low. The job of any low is to break the respective high. So if this low comes into here and doesn't break the high, but then the high doesn't break the low, and the low ends up breaking this high, now we have a change of character. And then when you come back like this, like that would be your breaker structure on that second break. So the first one's your change of character. Second one's your break of structure. So now you should be able to go break even if you entered like down here, because the idea is, right, due to order flow, let's say we have a order block here, and then an order block here, right? Let's say we entered on this one. After the price comes back above here, the idea is that it should tap into this order block like this. And move higher like that. Which is why like I also go half break even, because like once it pushes out a decent amount, like due to order flow, it shouldn't really be coming back in here, unless it's like sometimes it'll come back and sweep liquidity and keep pushing. Nothing I can do about that, you know. So the whole point of having an edge, you give yourself a better chance, but it doesn't make it, you know, you infallible to the market.
That's a protected low, huh?
Yes, sir.
Yes, sir.
Let's see what we have.
What's a protected low?
So a protected low. So you see how I drew this up, right? We have a low here,
Yes.
and then we have this high here, and we have a low here. So the idea is that since order flow was already bullish in this sense, meaning like order flow meaning like basically the trend. So if price is doing this, coming up, breaking a high, coming back, mitigating a low, breaking a high, coming back, mitigating a low, breaking a high, coming back, mitigating a low, breaking a high. That means that order flow is bullish, because we're protecting the lows here and breaking above highs. But in terms of like getting into your trade, as soon as you like come into this low, right? Let's say that we were selling down to this point, which is fine. Like you can sell from here if you have, you know, proper affirmation down to this demand. Like nothing wrong with that. But knowing that order flow is bullish, your expectation should be that it's going to head back up to break this high. So when I see basically a break above here, right, after we made this low, this high, and this low, my assumption will be that the selling has discontinued, because as soon as you break a high after coming into like an area like this low right here should become protected, because like this low didn't break, which means that this high didn't do its job. And if the selling discontinued here, then now this area becomes protected, and now this high right here will become targeted. And then once you break that high, boom, then we can say, okay, now price may go a little bit higher, doesn't really matter, but our expectation is that it'll come all the way back down to this extreme and do the same kind of thing. So price is selling, let's say, still selling, okay, it took out that low. Now as soon as the low, or the high that took out this low, gets broken, alright, now you have a new protected low. So this one was protected before. And now this one will be protected for the time being. Now, the whole thing with protected highs and lows, right? They can change at any moment. The reason I say that is because, like I said, the expectation of this low is to break this high up here. So if we suddenly start pulling back, and now like this low gets taken out, whoops, this low right here. Targeted, exactly. So let's say we do something like this, boom, we shoot there. That breaks and we come back up, right? Might have another chance for buyers. Like at this point, like buyers can technically go back up and break this. But if you see it fail again, like now all these lows that were once protected are no longer under protection because they didn't do their job. So now they're gonna get fired. So that's gonna happen. And now obviously the trend will go from being bullish to being bearish. So now our expectation is we're gonna protect highs and break lows until we don't, you know? And it'll go back up and do the same thing. So now this is the highest point we made since making this low right here, right? And so this low right here, or really these are like the same low, technically speaking, but these lows now have the chance to go and break this high. Doesn't matter how high we come up into this right here. As soon as you start like pulling back and no longer breaking new highs, then your assumption is that this area now will become targeted again. Now, when I say targeted, it doesn't necessarily mean that it has to break, right? It just means that it has to be, that it's gonna get targeted. So same thing, this came up here super close. If this came up down here and was like literally a half a pip away, but started to accumulate and protect these lows, right? My assumption now is it's gonna go after this high. So it's just like ping pong, you know, which is why it really makes no sense to like try to buy it when you're really high up like this, or to sell when you're really down low like this, because you're putting yourself at a really huge disadvantage. Does that make sense though?
Yes, sir.
Hey, can you show us a model of how you know it's a reversal? So I know it's two valid supplies. Like say if it's bearish and reversing to bullish, I know it's two valid supplies. So can you show us that if it's not on the lines, at least on the candles to see?
Yeah, 1 second. Let me show this. So you said, so ask your question one more time, Dave.
Just show us a valid reversal. Like say price is bearish and there's a change of character.
Yeah.
It's a reversal. And not just a pullback. Okay,
for sure. So, for one, the easiest way to know it's a reversal and not a pullback would be like using your higher time frame POI. So like, obviously like this right here, we're pretty bearish, right? We're selling off. Now if we were to come into like, most likely like, really like deeper in here, and we're already bullish from here, at least above this high, you know? So now we should be targeting like somewhere down here, right? Is that current? Oh, damn. Okay, well, I wouldn't be able to show you on this without actually drawing something. All right, so let's say this had actually tapped a higher time frame POI. The way you know it's like a reversal and not a pullback, you just wait for it to, let's say this is the high, right? That was in question. You want it to break that high and then like start protecting this low. As simple as that. And once you see that, your assumption should be that now it's headed towards this high up here. Will it break it? I'm not sure. But you know that price is reversing from there because it broke order flow here and then protected a low here. So essentially like that's where that whole idea of like a double soup comes in, like, right? You're selling off, selling off, selling off, selling off. As soon as you break that, boom. There's no way for you to really know if it's a pullback or a reversal. Like if that's what you're like, if you're asking like a pullback to here or a reversal to like break that, there's no way for you to really know that until it actually breaks that high. Because due to how price works, it can literally come up to here. Like I said, respect that, and then take that out. Now, boom, once it breaks there, they say that this was like a low on the hourly. This is a high on the hourly. Like now you should expect something like this. And it's gonna push down back into here. And like now, since it already took out that hourly high, it's just gonna start chasing the 4-hour high. And the only way that you know for sure, like it's gonna like really reverse or like push very strongly from one area to another, is just from using your higher time frame POIs. Because like obviously looking on the lower time frame, there's no way to truly know when a reversal is happening. All you gotta do is, or all you can really do is follow order flow. So like obviously, if we were buying from here, then we know that if we started breaking up again here, oops, then my expectation would be that it's a reversal happening, or not a reversal, yeah, I can see a reversal happening up here. Because obviously we were selling pretty strongly down here. As soon as we come into our high time frame demand and we start buying back up, I'm aiming for this. To me, it doesn't really matter if it goes and clears that entire high or not. But I know that if we were already bullish over here, then the chances of that happening are a lot higher. But since I don't always pay attention to the higher time frame, like I'm not always monitoring like whether it's a true reversal or not. I just know how to spot like when price is starting to pull back in general. And so I like basically price, just start doing, it'll start flattening out. It'll start flattening out, and basically you'll get usually some kind of purge liquidity too. Not always, but usually. And so when that happens, then you'll know to start the next draw on liquidity. It's like we drew liquidity here below that low. Then now I'm aiming for that. But in this instance, this would be more like a pullback because it still managed to like take out these lows. Versus like if this happened here, we didn't take that low out, then my expectation will be that this is probably gonna break. Because this high, like I said, didn't do its job. Does that make sense?
Yes, sir, Steve.
Bad.
Where would this recording be found?
I'll probably post it on YouTube in a little bit. Probably like the next week or so.
Okay.
Let's see. Oh yeah, here's a good example. So like obviously from here, let's just use this as a point of reference. We sweep liquidity above that high, right? We don't get any true break because boom, we sweep there. Still we sweep again here. We don't get any full body closures. So now my expectation is that it's gonna start reversing or pulling back down to here. Now you see how we're obviously selling. Price is starting to flatten out. We grab a ton of liquidity here, for one, and then two, we grab liquidity here, and I'm pretty sure we swept this too, just barely, and then tapped into this area here, which would now be protected because of all the liquidity that was swept. We've taken that inducement. For me, if I see something like this, I'm pretty aggressive, so I will probably buy like above this right here. I like to buy as low as I possibly can. That way I feel better. Let's say I buy from here, okay, cool. My target would be first this, because technically speaking it hasn't broken bearish order flow, but since it took a large amount of liquidity, like I know it's gonna try to draw on some more liquidity. So I would target this high. Now like once that breaks, and you can technically target all the way up here, but for someone who's like more reserved, since this was the low that got swept, you waiting for this high to break right here for you to say, okay, like price can actually continue higher. Then we get that. Then we look for the candle that broke that. Okay, cool. We got this decisional right here. IFC. So now, if I don't really limit order in, but if I was gonna limit order, my first limit should be like from here. And from here, like, because we're already reversing from here and protecting this low, this particular low here, this is the lowest point we came, right? So we're protecting that. I know that this high is gonna be in trouble. So now I can aim for that entire high right there. Or if I want to be even more preserved in terms of my entry, right? I could wait for it to break again here, right? And I can try to get an entry off of like something inside of here. So your first instinct would be to try to for this, but it looked like it didn't come all the way down there. It used just the range of demand. So this would be your safest entry. And in respect to like our range, we're still within the discount, which means that this would be a safe entry. Now, like, the closer we get to the equilibrium, the less likely that these areas will be the works. Obviously, this is in the discount. This is in the discount. This was not, or I guess, yeah, technically it was right on the equilibrium. But you can see how, like, once we get higher into this premium area here, like, these demands start to act a little funny. So I'm not trying to buy way up there. My general rule of thumb is, like, after we have, like, 1, this would be my first mitigation, 2, 3 mitigations, I usually won't try to get new entries because, like, basically my chances of getting knocked out are a lot higher. Let's say we got an entry here, same thing, like, I'm just gonna aim for this high up here for the time being. Whether that goes up there all the way or not, I really don't care. Because before I used to want to hit my full TP, but now, like, because of how I manage trades, I take I take profits, I manage my trades properly. Like, I don't really care. It's like right here, let's say hit this TP, and then for me, this is close enough to my TP2 for me to want to go break even. So now I'm break even here.
It's a smacker.
Yeah, it's a smacker for real. Break even, boom. And now it comes back to this first TP and starts buying again. And literally, like, since after touching this and hitting this, like, it doesn't come back until it hits like my profit target, you know? So like I said, it doesn't really matter to me whether it goes and breaks it or not, which is why I don't mind playing reversals or pullbacks. Like, it's all the same to me. The only time I would be like wary to playing pullbacks is if I'm seeing like heavy selling like this, because chances are, like especially days like today, this is the 1 hour, so it's not completely relevant today, but especially days like today, like where we're just flushing, it can be hard to play pullbacks because price doesn't always come into the exact premium or just start pulling back on days where it's selling heavy like this. But it's also what patience is the name of the game. So if we were selling heavy like this, what I wait for is, 1, like I said, for it to tap into some kind of higher side from POI. But 2, I'm more of a visual person when it comes to entering trades. So if I see that we're selling super hard like this, like, right, let's just imagine it from the point of view of like the slope. If the slope was like this on the chart, and all of a sudden the slope goes from being like that to kind of like going like this, right? My assumption would be that price is starting to lose its steam as far as the sales go. And